What is up, guys? It is October 1st. There are just 3 months left of 2022. What a year it has been for the markets, pretty much down only. So now that we have the monthly close, we also have the quarterly close. So in today's video, we're going to look at all the monthly closes, the quarterly closes, and we're going to look at what that predicts potentially for the next 3 months, for the remainder of this year, for the price action of Bitcoin, Ethereum, obviously the rest of the altcoins, but also of the S&P 500 and the Dow Jones, which is the US stock markets, which are basically leading the crypto space. So this is going to be a bit of a longer video because we have so much to go through. Make sure you are comfortable, get yourself a nice cup of coffee or tea or water, whatever your favorite beverage is, and let's dive straight into it. If you are new to the channel, welcome. My name is Dirk. Click that subscribe button down below to make sure that you do get future updates, and click the notification bell after you do so you do get those alerts. And if you want to get on my email list, it is the first link in the description down below. I do suggest you do that because then I can email you every time I have a new video and you won't miss it, because there's always so much going on with these YouTube notifications. When you get an email, it makes it very, very easy. And of course, if you want to learn more from me, I do have a VIP mentorship and community, all things crypto related. All the details are down below. If you click the second link in the description, you will find everything right there. All right, so let's start out by looking at the Bitcoin historic return since September has just closed. Yes, September was once again red, but it was a single-digit red month. Barely any movement, really, minus 3%. So if you look at what happened since 2013 with these September closes, it is perfectly in line with the last 9 years worth of closes. It was red, single digit percentage, just like most Septembers were. So that actually is good to see, because it just means that there is some sort of repeatability or track record with these past historic performances. And even though it doesn't mean guaranteed that something is going to turn out a certain way, it is good to see that kind of predictability in the returns. So when we see October tends to be more of a green month than it does red. And even the 2 months that were red, we only had minus 3.83% in 2018 and minus 12.95% in 2014. The rest was all green. So historically, basically, October is a green month. Now, that does not guarantee that this month is going to be green. We can always see an exception, and who knows, it could end up being the worst red month that we've ever seen. Just because it's been green this many times doesn't mean it will end up being green, but just based on the track records, you know, it's nice to know there is a more green bias towards October. And of course, we have the US midterm elections that are happening next month, and traditionally, based on the historic data on average going back many decades, the US midterm election year, Q4 tends to be bullish with a rally going into those midterm elections. That is, again, the average. It's not a guarantee, but the average is the average. And maybe this time is going to be in line with the average. So hopefully we will end up getting a green October and a green Q4. This over to the quarterly, you can see over here, since Q3 closed, we were minus 2.57%. So we did get a red Q3, but basically barely red. Not far off 2018, which was also the previous bear market. So pretty similar. There's a small difference between those. Obviously, these two green Q3s were in the bull market of 2020 and 21, so that's not comparable. So the best comparison would be 2018, and you can see that is very, very similar over there. So Q4 in general tends to be more green than it does red, but keep in mind also, this was the bull market in 2021. This was the bull market obviously in 2020. 2017 was a bull market. These years were the bull market. So 2018 was the bear market, and that was a bad one in 2018 because that is when we got our final capitulation. We can look on that in the chart in a little bit too when we go and do that. But remember, November 2018 was the bear market capitulation of 2018, where Bitcoin was hanging on that 6,000 level for so long. And then eventually when we got that fork of Bitcoin with Bitcoin and Bitcoin Cash, if you remember that, so Bitcoin Cash basically launched as a fork of Bitcoin. When that happened, the chain split happened. Don't know if that was the exact reason, but at that time when that happened, the whole market dropped another 50%. and that is where we got our final capitulation when Bitcoin dropped to $3,000, just above $3,000 in 2018. That was the ultimate low of the previous bear market. So Q4 is going to be interesting, even though there is a tendency for green, even though, like I've said, October tends to be green, even though we have the US midterm elections coming up. We can hope for a green Q4, but we might still get more downside too, and we have to wait and see. So I'm going to jump into the charts, and I'm going to give you levels. And the only way we are going to know for sure, right? A quarter is obviously 3 months, so giving a quarterly prediction, very difficult to do. We keep an eye on the lower time frames, the monthly, the weekly, even the daily, which gives us much more insight into when trends are showing signs of reversal. So even though purely looking at a 3-month candle, you can make some sort of decision, but that's going to take very long to actually get you an answer. Whereas if you're looking at the lower time frames on the daily or even shorter than that, you'll be able to change your opinion or your direction much quicker when it reclaims certain levels or breaks certain levels. And that's why it's important to look at the big picture, but also for the day-to-day trend changes, look at the smaller time frames. So let's start out with Bitcoin, then we look at Ethereum, then we'll look at the stock market, and then we'll put that all together in a conclusion at the end. So currently Bitcoin actually ended up closing the month below $20,000. It closed at $19,425 for the month, for the quarter. Okay, it closed below 20,000. It closed below the 50-week moving average, which is here in blue. This is a monthly chart. So before I get into my thoughts on what is happening now, let's look at last month's prediction, what I said on the 1st of September, and then we continue from there. Okay, so if we're looking purely on a monthly time frame, this is bearish. We want to see a reclaim of 22,500 with a monthly close above that before we start to get bullish. And the bearish technical target could potentially be this fair value gap on weekly. I've talked about it on other videos. Basically, it is also the resistance over here in 2018, resistance over here in 2019, and you can see that's where we finally broke through in 2020. It's very possible that we retest this level, which is somewhere between $10,000 and $14,000. So basically, I said we need to reclaim this 50 moving average on the monthly, and otherwise the target is potentially 10 to 14,000 with the fair value gap. You can see what happened in this past month. We basically tried to reclaim this. We got a wick, if you're looking on the monthly, a wick just above it, but it sold back off again. We closed below this 50-month moving average, and we basically ended up having a small red month over here. But that doesn't change anything. So basically, last month's analysis still stands. We need to reclaim 50-month moving average over here, which is currently about 22,500. We need to get a monthly close back above there before we can start to consider saying, hey, the bottom is really in, and we are going to go a lot higher from here. Before that happens, we need to reclaim this. And until that happens, being below this, and especially being below $20,000 now, the downside target is very much still potentially this fair value gap. It's on weekly, as I've marked over here, somewhere between $10,000 and $14,000. And unfortunately, that is still a potential scenario unless we start to reclaim this 22,500. And if you zoom in on the lower time frames, I can do that in a bit later. I've done it in other videos too. We're basically looking at the 200-week moving average, which is very similar to this. It's about 23,000. And then ultimately, the best, highest probability indicator is if we reclaim the 3-day 50 moving average, which is currently sitting at about $24,000. So if we can reclaim 24,000, I think the odds start to favor upside, bullish continuation, and potentially the bottom being in and likely us continuing higher. Until that happens though, so until we get above 24,000, there is still very much risk to the downside. And you can see how much this is sitting over here on this level, which is basically, you can see it even better if I zoom in on weekly. And if I go over here, you can see how much this level, the previous all-time high in 2017, is now sitting as support. But usually, and just especially because on monthly, this is just a wick, there's basically just this thin air over here. There's not much support between where we're sitting right now and this fair value gap weekly, which provides a lot more support over here, as you can see. So my suspicion is the longer we sit here, and especially the longer we remain under 20,000, the higher the chance of a potential breakdown. And if it does break down, you know, there's basically just thin air here. There's not much support. So if it does drop, it could end up dropping pretty quickly and then find support, hopefully around this area over here, if that does that. And like I was saying earlier, remember 2018, right? A very similar thing. It sat on the $6,000 level for a very, very long time. You can see it sat here from about June all the way until the end of October, right? So that's 5 months. It was sitting on that level, and yes, it had the scam pump, and every time it had a few pumps, but ultimately it was sitting on there until eventually in November 2018, we had the breakdown, and it just dropped 50% in a matter of less than a month. Okay, it completely dropped, but that ended up marking the bottom of the bear market. It went sideways for a few months and then completely recovered and went all the way back up. So the point I'm trying to make here is, look, we could still drop. We could end up dropping to this level. This could end up being the same as 2018, where we're sitting on this horizontal support of about 19,000, 19,000, and eventually we do make a quick break where we drop down to this fair value gap level, which is, you know, another 40 to 50% down on Bitcoin. But if it repeats this, that could then potentially mark the lows. It could create a bullish divergence on many time frames, and we could quickly recover again within a few months or even less, in the same way like this, go all the way back up. So potentially if that happens and we do drop, go sideways for a little bit and go all the way back up to maybe 30 or 40,000 right afterwards within, you know, 6 to 12 months from there. And then again, if that does happen, that would end up being an incredible buying opportunity, because imagine you had bought Bitcoin and your favorite altcoins at that capitalization in this area over here in this time frame and just held on for the next 2 or 3 years. You would have made a small fortune in terms of returns. I mean, if you had bought Ethereum from here, it went almost 50x if you would have held on for, you know, the next 2 to 3 years up to that point. So to sum up, in terms of just keeping it simple, for Bitcoin, we need a close back above the 50 monthly moving average, monthly close back above that at the least, which is 22,500, for us to start turning more bullish. Until that happens, there is risk to the downside, and I think the next logical level, if we break this level where we've currently been sitting on, this 18, 19,000, if we break that, I mean, I think the next logical target and support would be this fair value gap somewhere between 10 and 14,000, and hopefully if that happens, then we get a quick recovery in the same way that we saw this in 2018, that within 6 months, maybe even less, we get a complete recovery back up, and maybe even then a continuation and the start of a new bull market if that happens. And just a quick look at the quarterly chart before we move on to Ethereum, since we did get the quarterly candle close. As you can see over here, it just ended up having a wick to the upside, coming back down, and that's still a red candle. It's still a bearish candle in my opinion, and you can see we could easily still get a move back down, but hopefully it could end up being something like this, where it moves back down, it ends up being just a wick and pulls back up by the end of the quarter. So even if we do end up selling off here in October or November, if we pull back before the end of the year and we end up back at 20K by the end of the year, we might get a nice potential reversal candle like that, maybe another one next to it in Q1, and then potentially we can start to move up. So that is a possibility. Again, it's also not a guarantee that we are going to sell off here. Maybe for some reason it can hold and continue going back up, but like I'm about to show you with the stock market charts later on in this video, it doesn't look very bullish. So the risk for more downside in the coming months is still there, and like I said, until we reclaim some bullish moving averages and bullish key levels, we should just continue to watch and be patient and let the charts show us where they want to go. Okay, so Ethereum is currently trading at $1,331. So before looking at this chart, let's look at what I had to say about it last month, and then we will look at this chart. I would want to see us get back above this monthly high, so above 2030, and ideally we want to get back above there with at least a weekly close, if not a monthly close above there. Once we get back above there and we can flip this area now, which is acting as resistance, back to support, then we can start talking about further upside. So 2030 on the upside, we want to flip that to be able to get bullish, and downside we're looking at the 50 MA, so about 1200. If that breaks, about just under 900, and if that breaks, probably somewhere between 300 and 500 worst case. So looking at Ethereum, basically I said we need to reclaim 2030. We need to get back above there with a monthly close for us to turn more bullish, and until then it could drop to the 50 moving average Otherwise, the June lows, and after that, somewhere between $300 and $500. And basically, so far, that still stands. So we still need to reclaim this 2030 level to get more bullish, at the very least, right? I would say we can look at lower time frames and stuff as well, but 2030, until we get a monthly close above there, thinking about more upside, there's just no point. And until we get back above there, there is still downside risk, like I shared with you on Bitcoin too. So I said the next target last month was the 50, and it did that exactly. You can see it pulled back exactly to this 50. It dropped to there, pulled back a little bit. We're currently sitting at 1332. So at this point, we're seeing, does the 50 continue to provide support here or not? If this breaks, we're probably retesting at least the June lows under $1,000. But if we do continue to get more sell-off or capitulation, or if Bitcoin does end up selling off somewhere between 10 and 14,000, I think it's likely that Ethereum still goes to new lows, and quite potentially to this support level over here, which could still be somewhere between $300 and $500. So I don't want to get too bearish. We don't know if we're going to get that downside, but the risk is there. And I also don't want to get too bullish because we do not have any bullish confirmation yet. So at this point in time, it's in a tricky spot, just like Bitcoin. But what I'm about to show you with the stock markets too, everything does have a bearish bias, in my opinion. The charts are bearish. The macro, what's happening in the world, is bearish. The interest rates that are rising is bearish. The inflation that's going high is bearish, because high inflation means they want to continue keeping interest rates high or even raising them even more, which is more bearish for the stock markets, which is bearish for Bitcoin and Ethereum and crypto. So until we get bullish confirmation, like I said, on Bitcoin, that is at least 22,500 with a monthly close, but ideally even better 24,000 on Bitcoin. The same thing applies for Ethereum until we get some sort of bullish confirmation. And for me, I'm looking simply here, reclaiming these highs with a monthly close, 2030. We get a monthly close over 2030, and I will probably start to flip more bullish. Until then, we just have to wait and see what the price action is going to do. Maybe it continues to range. Maybe this 50 provides support. And maybe we don't break down, but we just continue sideways for a few months. Or we do still have that potential breakdown scenario. And we could still go as low as somewhere between $300 and $500 in a worst case scenario. The reason why I'm saying that, I'm not saying we will get that guaranteed, but the reason why I'm saying that is I want you to be prepared for that mentally too, and obviously financially, so that if that happens, worst case, even if it doesn't happen, but at least that that if it does happen, that you're going to be prepared for that you're not going to be in financial difficulties, that you're not going to be financially ruined. Hopefully you have been responsible with your crypto portfolio. I mean, experts say it shouldn't be more than 10% of your net worth. So in the very worst case, even if you lose all your crypto, you only lose 10% of your net worth. I know a lot of people don't do that. A lot of people are irresponsible and they put in 50, 60, 70, 80, 90% of their net worth into crypto, which is great when it's going up. But when it goes down in these bear markets, and if it drops another 50%, I know a lot of people could be in trouble. That's why I'm saying this. And you have to make your own decisions. It's not financial advice. I'm just warning you. We saw this in 2018. We saw what happened when it eventually did end up dropping another 50% in the last 1 or 2 months of the bear market. Will it happen again this time? Only time will tell. Okay, maybe it doesn't. But if it does, you have to be sure that you're going to be okay. And even better is that not only are you going to be okay with your current positions, but if you have spare risk capital available and you are able to buy a capitulation like that when it does happen, that's going to be an incredible buying opportunity. Like I showed you on the chart before, if you had bought the 2018 bear market capitulation and you held on for 2 or 3 years, it would have been an enormous return, right? So again, there's always risk with crypto, but if you are prepared and you are managing your risk, then when the opportunity presents itself, you can act on that and take advantage of that. So a quick recap of Ethereum, just with numbers. We're looking for a bullish scenario with a monthly close back above $2,030. Until then, we have to wait and see, is the 50 moving average going to continue to provide support at around 1,220? If it does not, we probably retest the lows just under $900. And if that doesn't hold, we're probably looking at $300 to $500 on Ethereum. Just a quick look at the Ethereum on the quarterly chart. It's just interesting every 3 months to look at these candles too. And you can see over here, we just had this big wick that pulled all the way back down. And you can see it actually ended up almost just retesting the same zone over here. So this doesn't really tell us much. If you can see, we're currently right in the middle between this box and this box that I have over here, the $300 to $500 range and the 20-30. So get above here, and that's when I flip more bullish, and get back there, and I think it could mark the bottom potentially. So what we're seeing here, maybe it's similar to this candle where we had this big wick to the upside, and the next 3-month candle was a wick all the way to the downside. It is potentially possible we get a big wick all the way to the downside, pull back up, and hopefully that marks our bottom. So this would be a level of interest for me personally. If we get to $300 to $500 on Ethereum, if that does end up happening, I'm deploying as much risk capital as I can to be able to buy Ethereum at those levels and then hold it for the next 3 to 5 years for hopefully the next bull market. And you know, this time hopefully a 20x or more on Ethereum would be absolutely fantastic from those levels. So imagine it goes to $500, 20x in the next bull market would take us to 10,000. That is not that unrealistic, seeing that we almost hit $5,000 in this last bull market. And the last bull market run was almost a 50x. So this time, if we go to 500 and we get a 20x from there, I think that is something that is realistic, that is possible, and hopefully it does end up playing out that way. Okay, so now let's look at two stock market indexes, the S&P 500 and the Dow Jones Industrial. And the reason why we're looking at this is because, as you know, crypto is very correlated to the stock markets lately. So in general, Bitcoin is following what the US stock markets are doing. And because all the altcoins follow Bitcoin, basically we're looking at the US stock indexes and the stock market as basically a bit of a guideline or a benchmark of where crypto could go next. And in general, if the stock market goes up, crypto is going to go up. If the stock market continues going down, it's likely that Bitcoin and the rest of crypto are going to continue going lower until at some point maybe we get a decoupling where Bitcoin really does become some sort of flight to safety or some safe haven, where if everything is collapsing, fiat currencies are collapsing, stock markets, all assets are collapsing, maybe there's some flight to safety in Bitcoin. We don't know for sure, but at some point that could potentially decouple. But for now, we are probably looking at, if the stock market continues lower, Bitcoin and crypto are probably going to continue lower too. So starting out with the quarterly close, which we just had, the 3-month close, there is something not very bullish that I'm seeing here, which is a bearish divergence with the RSI on the quarterly chart, right? So if you look at this, the 2000 top in the S&P 500 and the 2007 top, this was basically a double top on the price, but the RSI didn't confirm it. It created a lower high over here on the RSI, and at that point we had the 2008 financial crisis, where the price of the S&P 500 dropped by about 55% from that high. Now what we're seeing is, since 2018, we made a much higher high on price over here, as you can see in 2021, but the RSI did not confirm it, right? So that is potentially an ominous signal here for the stock market, and that could potentially be showing us that we might still have a lot more downside. Now, it is not a guaranteed thing. There's no crazy amount of touch points. It's just a divergence, but it is present. And if you've been following me on the channel, I've shown this many times. We also had the negative divergence on the Bitcoin weekly chart with 66 to 69,000, and that led to this enormous sell-off that we've seen over the last year. So these things are not to be taken lightly, and in the very, very best case, I mean, of course, maybe we go up and we get one more touch and continue creating that divergence. That is a possibility. So I'm not saying it's a guaranteed thing, but you don't want to be seeing this if you are bullish. You don't want to be seeing a bearish divergence, especially on a chart like a quarterly chart. And obviously, because it is a quarterly chart, it doesn't need to play out very soon, right? Each candle takes 3 months, so who knows, it could still take a few more candles. But seeing this is not a good sign for the bulls. And if this does play out in the same way as it did in 2008, and we're selling off 55% from the 2021 top, we're potentially looking at the low 2000s, which would be, you can see this is the 50 moving average on the quarterly chart, which was the bottom here after the 2001 sell-off. You can see it went all the way back to the 50 quarterly moving average. And the 50 quarterly moving average right now is sitting at about 2400. You can see we're currently trading at almost 3,600. So if we do end up going back down there, or worse, even below it like in 2008, that's a lot of downside potentially for the stock markets. And that would probably be bad for Bitcoin and the rest of the crypto markets. So that's why I'm saying, until we get bullish confirmation, don't be so eager to flip bullish. We're seeing it a lot, especially on social media, on Twitter. People are so eager to flip bullish on every little pump, $500 move or $1,000 move to the upside on Bitcoin. But until we get that bullish confirmation, I would love to be bullish. I would love us to get a new bull market. And as soon as the charts give me that confirmation, I will start sharing more bullish videos again, because that's basically what we need to do. As long as the charts are still bearish, the downside risk is still there. And I just want to share that. It's really not my opinion. It's how I interpret the charts, but it's what the charts are telling us. Okay, and until we get that bullish confirmation, the risk is to the downside. Once we get bullish confirmation, we can start flipping more bullish and start looking to buy dips. For now, you got to be careful, and you got to realize that in the stock market, if this drops another 30, 40, 50%, who knows if it's going to happen, but if it does, what is that going to do to the price of crypto? And that is why you want to make sure to manage your risk and not overextend, that in case it does drop another 50%, that you're going to be okay. And even better, still have that risk capital available to buy that capitalization. Because look what happens if you bought those lows. Look, for years it went up. If you bought those 2009 lows over here, it went up for, 14 years. So the opportunity is there. While there is short-term pain to the downside, if you are positioned correctly and you manage your risk, it's an enormous opportunity. And it's actually amazing, because at these points where everything is insanely high, the potential for upside and for gains is basically not there anymore. But once we've had this flush out and we can start the process again, that's when the huge gains are there to be made. So it is very, very important for your future success, your wealth, your financial freedom, how you play the next, say, 12 months, how that's going to end up playing out. And the very important thing is risk management and capital preservation, and basically just waiting until we get bullish confirmation before turning more bullish. So guys, are you still with me? I told you this was going to be a long video. I'm sorry for that, but there's just so much to update, and I want to make sure to do it properly to keep you as informed as possible. So, if you're still watching this, awesome. Let's continue. Make another coffee if you want. Put the video on pause, make a coffee, come back here. We're almost done. Just want to work through a few more charts and then give you a final update and summary and conclusion. And by the way, if you do appreciate this video, please smash the like button, leave a comment down below. What do you think is going to happen? And share this with your friends and family on social media. Let's get more people watching this, because the more people that are prepared, obviously, the more people that can learn and benefit. And of course, make sure you are subscribed down below. Click that notification bell. So let's look on the monthly chart over here. And you can see, just as the quarterly divergence is there, the monthly divergence is also there. You can see even here, monthly divergence. And what we're seeing now on the monthly chart, we are sitting right on this 50 moving average on the monthly, which you can see in a bull market provides support. You can see how many times it touched it, bounced, and then stayed above it. Once we break below it, again, this is a very simple rule. It works on many different time frames. If you have the 50 and the 200 simple moving average from a bullish market, if you break the 50, likely the bullish trend is broken. We trend towards the 200. If the 200 is broken, then we enter a long extended bear market. But as you can see on the monthly, basically you can call this an entire bull market, right? It is only in 2008 where we broke below it, but until that happened, basically everything else we stayed above the 200 monthly, and you can see it's just a channel going upwards, right? And obviously there's all sorts of different things that you can factor in. I mean, obviously the value of fiat currency, if you price that in real terms with inflation, it probably looks a bit different. But basically just looking at this chart, it's a giant bull market with corrections on the way, okay, in the big picture. So it is important to understand these corrections and to be prepared for what happens. So right now we're sitting on this 50, okay? It's going to be interesting to see what happens in October in the next couple months. Can we bounce? Can we hold this as support, as we have done basically every time since over here, since 2011, okay? We touched it over here and bounced, touched it over here, bounced. Even March 2020, we wicked below it, got back above it quickly and continued higher. So the question is, can we bounce here and can we continue higher? Obviously, things have changed, right? You have to factor in that during all this time we had quantitative easing and rates were super low. Right now, we have the rates that have been increased. We have the Fed that is saying, hey, we're going to increase even more, 2 times still expected before the end of the year. And we no longer have quantitative easing, we have quantitative tightening. So the conditions are different here, which means that based on the macro conditions, it probably favors more downside. So we break this 50 to the downside, and the likely target becomes the 200 over here, which is again somewhere around $2,200, which lines up with a 55% correction, just like we had in 2008. And if you look at the lower time frames, I'm not going to do this video because it's too long already. Basically, the move so far on the weekly, on the daily, it very much matches the 2008 price action. So it's like you saw over here in 2008. We grinded down, we sat on this 50 for a couple months. Eventually we broke down straight back to the 200 and below it, right? So it's possible we could sit here for a little bit, but that risk to the downside is still there, and it could break down, go to the 200, maybe even a little bit below it, right? So there is potential for a repeat of 2008 at this point. And like I said, until we get some sort of bullish confirmation, the risk is to the downside, and we just have to continue to be patient and let the chart show us. And at this point, I would basically say we need a reclaim, we need a monthly close back above 4,200 on the S&P to be able to start turning more bullish again. And real quick, I want to show you the Dow Jones. I will run through this quicker than the S&P because this video is already long, but I want to show you this. So the Dow Jones Industrial Average, it is actually leading the S&P 500. So it's a little bit ahead. The S&P 500 is lagging, but tends to follow the Dow Jones Industrial Average. And this is important because even though the S&P 500 is just sitting on the 50 moving average for the monthly, the Dow Jones is already closed below it. And that means that it's likely that the S&P 500 is going to follow. And again, if you're looking on lower time frames and you compare 2008 to what's happening right now, that price action is very, very similar. And breaking below this 50 monthly moving average, the blue on my chart, the next target could be the 200, which, as you can see over here in 2008, happened. It actually went below it. So just zooming out once again to show you the same thing. Bull markets, we stay above the 50. Breaking below it is not a good sign. So it did this over here in 2000, and it didn't quite make it there. Okay, so that was a bit different, but keep an eye on that. Stay above it, that was good. 2008, break down. And below the 200. Get back above it. The entire last 10, 11 years, we've stayed above the 50, with the exception of the March 2020 sell-off, quick wick below it, back above it. So if we do end up breaking below it, the next target could again be about 200, which is the March 2020 lows, which is about 19,000, which is more than 30% down from current levels. So that potential is there. Are we going to get it? Are they going to save it? I mean, if you're looking at the macro climate, like I said, higher interest rates, quantitative tightening, the indication that inflation is high and the Fed still wants to increase rates even more, that is bearish, and that probably gives a bearish bias towards the probabilities of us breaking to the downside. So in terms of a conclusion for everything that I've shared in this video, hopefully if you're just skipping to this and you missed the whole video, go back and watch the other stuff because it is important you understand this. But just to sum things up, everything still looks bearish until proven otherwise. Okay, there is a bearish macro climate, like I've said 3 times already, with the interest rates that are increasing, that are set to increase, quantitative tightening, that puts negative pressure on the markets. There's obviously a lot of debt and derivatives, so if it does continue to sell off, we could see a quick unwind of people's liquidations getting hit, margin calls, and the whole market could unwind pretty quickly like it did in 2008. So in the stock markets, there is potential for a repeat of the 2008 style crash. And obviously, if that ends up happening, then it's likely that Bitcoin and crypto also goes lower. So my conclusion is that I would love to be bullish, and I will flip bullish again once the charts give us that confirmation. And in Bitcoin, for me, that is looking at reclaiming the 3-day 50 moving average, which is currently sitting at 24,000. We can reclaim 24,000 depending on how things look at that time on the chart. Obviously, I'll make a video at the time. But if we can reclaim that, that would be, for me, a sign that there is a good chance that the bottom is in and that we are starting to change trend. Until we get that, though, there is risk for downside and potentially more. So in summary, be prepared for more downside, even if we don't get it, because it's best to be prepared for the worst, but hope for the best. Because if we do get that worst case scenario, then you know you'll be okay with the current positioning that you have. And hopefully at that point, you will also have spare risk capital available so that you can jump on that opportunity. Being prepared like that, if it does happen, is going to allow you to live stress-free. You're not going to be worried. You're not going to be anxious. And in a way, you're actually kind of going to be hoping that it does happen and that we do get a drop that low, because it's going to be a generational buying opportunity, just like the 2008 lows were, just like the Bitcoin crash capitulation in November 2018 to $3,000 was, right? Those capitulations, when you are prepared for it and you have spare risk capital available, you want that, because that is the maximum buying opportunity, where the upside over the coming months and years is going to be the maximum too. So if it doesn't happen and we do start turning bullish and this ends up being the bottom, you know, I would be okay with that too. But until we get our confirmation, and I will update it when we do, of course, so make sure you subscribe to the channel. When we do get that confirmation, that will be the time to flip bullish. And I know that means it's going to be higher, right? We're trading at under 20,000. It means you have to miss out on potentially, you know, $4,000 or $5,000 move to the upside. But the good thing is when we get that confirmation, it greatly increases the chance that the bottom is in and that the trend has changed. Whereas if you buy now, you're gambling on, do we get a trend change or do we drop another 30, 40, 50%? And of course, if we are going to drop 30, 40, 50%, it would be better to buy lower, because you're going to get more coins or more shares for the dollars that you're going to put in. So all of this is, of course, my opinion on how I see the charts. I've tried to explain this as best as possible. It's not financial advice. Please make your own decisions. Please be careful and always manage your risk. That is the most important thing. And be patient. Opportunity comes when you are prepared. And if that opportunity does present itself and you are prepared, the chance to make incredible wealth is really there. And I think it's very important the next 6 to 12 months, how you play your cards, how patient you are, how you deploy your capital is going to be very important to the future success of your wealth, your financial freedom, you know, and the amount of money that you're going to end up making. So smash the like button, share this with your friends and family, leave a comment down below. What do you think? Do you agree with me? Was this video too long? What do you think is going to happen in the next 6 to 12 months? I would love to know. Comment down below, and I will see you in the next video.